What's good, everybody? Welcome back to another video. It is day 14 of journaling the process. God bless you guys all. I hope you guys had a phenomenal day today, and I'm praying that you guys did not trade today. And today we took no trades, man, but it was good to know that I could be away from the charts in peace, not really having to battle myself or have any quarrels with the fact that I wasn't in the marketplace. It was just another day in the lab, man. $0, which is fine. We're protecting that equity curve and that mental capital, right? We're not trying to do too much. We're only trying to show up when price is given the probability to do so. And as you guys can see, this is a classic overnight session profile. This right here is buy side taken and then sell side being taken afterwards. This is a very nice day. The only problem is that if you would have traded all of this right here all the way till 2 o'clock, you would have found yourself with a lot of consolidation, a lot of choppiness, a lot of time distortion, whatever you want to call it. There would have been a lot of issues for you trading this. I believe that some of these ranges were like 30-40 points, so you could have caught something. I mean, this one right here, a good nice little 50 points. You could always definitely catch something in the market, man. I'm not saying that you cannot trade this, that you cannot make money off of this day, but this day is not highly favorable until after 2 p.m. today. I didn't want to trade at all, but this was really nice to see, though, that they would do this at 2 p.m. This was really dope to see. They ran price lower, taking out sell side liquidity. The main focus that I want to have today is just after the 2 p.m. opening price, because after the 2 p.m. opening price, that's when everything was normal. Everything here was just choppy and was obviously low probability, and this became high probability after 2. So we're looking at this fair value gap here. And then we're also looking at this institutional order flow entry drill. We're going to keep this short and quick, guys. So we're going to do fair value gap here. Fair value gap here. I'm going to put the 50% line, the consequent encroachment. That way you guys could see what was going on here. This right here is the fair value gap. And what else? We have another fair value gap here. Another one here. If we go all the way over here. There we go. And so you guys can see how that's playing out. We have that. I also want to point out that Thursday's 12 a.m., which is midnight, that is where price gravitated to today. And we're going to talk a little bit about that, how opening prices or old opening prices could be reclaimed. So old opening prices could be reclaimed. I'm going to say that one more time. Old opening prices could be reclaimed. There is no doubt in my mind that they could be reclaimed. So we could just say 12 a.m. Thursday opening price from last week. Right, so as you guys can see, 12 a.m. opening price of the 5-minute candle, and then you go all the way out to today. That was beautiful to see. No, I wasn't expecting them to, like, let's say all morning. I wasn't expecting them to take it all the way down, but I did have this level outlined last night. And I had no expectation of them doing anything about it. I just been studying 12 a.m. opening price, so I didn't expect them to take it down there. But when we got close into proximity, I was like, let me test it and let me see if they're actually going to take it. So I left the level when I saw them starting to melt down as I was, at work. I was like, they're actually super close to this level. So I kept it on, and then I wanted to see how it reacted there. So I'm in the same coin to me leaving this here. Yes, I had this here, but I'm also learning at the current moment. I'm just doing a lot more back testing and collecting data of this. But 12 a.m. Thursday opening price gets tagged, and then we reverse to the actual T. So I want to go down to the 1 minute and just look at what the 5 minute had with these fair value gaps, and then we can refine here. I also want to point out that we have to use the 10 a.m. opening price because we always do. It's something that just for my routine, I want to be consistent with. So this right here is the 10 a.m. opening price. This is the 10 a.m. opening price. So that is something I'm gonna keep there. So as you guys can see, you could treat 10 a.m. opening price as a barometer of premium and discount. Anything above it is premium, so finding shorts above 10 a.m. if you're bearish is good stuff. Finding longs below 10 a.m. if you are bullish is also good stuff as well. But in this case, in hindsight, it was a bearish run lower. We have this fair value gap here on the 5 minute, which is great. And this is where you get the consequent encroachment from. But then when you go here, you see something else, which we talked about in the previous journal. We talked about in the previous journal video. This right here is something that we all know and we should love. We have buy side liquidity taken. Great. Say buy side liquidity. Buy side liquidity is taken exactly at 1:59 into 2 o'clock opening hour. Then we have price come all the way down. We have a run lower. Then we also have a market structure shift here. A market structure shift here. This right here is the 2022 model, the 2022 model. The ICT dropped. Fair value gaps near the market structure shift or at the market structure shift are high probability. Here we have this as a breakaway gap. This right here should not be reached into, but this one below could be reached into, or this one here. And they reach into this. We have the fair value gap on the 5 minute. This is above the consequent encroachment of the 5 minute fair value gap. High probability, that's a premium short. You could short it here, or you could have waited till this order block form here, and then you trade this order block opening price here as further, as a continuum trade, or you could have traded this fair value gap here after we've gotten the resistance already. Then you would have caught this beautiful move down. This move was about all the way to 12 a.m. midnight opening price on Thursday, 167 points. So that is dope. Obviously, I did not catch any of this. I was not trading today, but we're just going over price action just for the heck of it. We also have, in the morning, we touch down, we propel away from 10 a.m. They keep coming down. They came down again at 12, repelled away, come back down. We don't get in there, but once we get in here, now we have the turn of events to the other side. I am going to also put on, just for completeness sake, I want to put on the new daily opening gap or the new weekly opening gap. Let me just put this here. There was a gap today. I want to take off overnight session. There was a gap today. Let me see. This is Sunday. Yep. So we can just put this right here. Closing. This is the closing price. This is the opening price. Right there. So they could have potentially reached into the new weekly opening gap, but them failing to do so shows the weakness in in NASDAQ. them not being able to break above any other highs and they're just rolling over, this shows a lot of bearishness. If this pair was bullish or was in the limbo in between, they would have found themselves reaching back into this new weekly opening gap. But the fact that we keep on failing to get above the previous highs and failing to continue to want to get into the new weekly opening gap, we have ourselves this dilemma here. 12 a.m. is here. They tag it. I want to go ahead and now talk about also something that I'm realizing, which is the 230. Let's see this. This is a 230 candle. I just wanted to throw it in there as well. I'm not saying that this is actually the be-all end-all or any sort of model, but just something I noticed as I was glancing at price today. 2:30 p.m. closing price. And I don't know if this is something ICT has talked about, but we also had the opening price, the closing price of 230. We come back in there. We leave this as a breakaway gap. They come, retrace. You have prices going lower and prices screams lower, and then of course 12 a.m. and reverses. I don't know how accurate the 230 closing price is, but all I know is that it's something that I'm keeping my eye on. If you go to the Dow, let me see how Dow reacted today. Dow was, wow, Dow was beautiful today. Wow. Is Dow back in action? Ooh, I love that for us. Because this is one of my favorite pairs, even over NASDAQ, to be honest. When it wants to move, it'll move. And it does a lot of nice things. I have a whole model for the way that Dow Jones runs itself and how it works and everything. So this is one of my favorite pairs to trade. We have here order block that takes liquidity. If you know where the liquidity is at, you know where your fair value is at. If you know where your fair value is at, you know where your order blocks are going to form. If I would be so kind to myself and just draw the 50% of this order block, we almost touch it there. Don't actually touch it all the way, but we get close. Failure to do so should be a weakness sign. It should tell you, hey, we're weaker. We have this bearish order block here. Consequent encroachment of the wick. Sorry, guys. And then price falls from there. If we go down to, let's just say, the 5 minute or something, just want to touch base with overnight session, see how we're doing. Wow, beautiful. Today was a beautiful day for the Dow Jones boys. Here we have buy side taken, then they take it sell side. Here, sell side taken as well first. Well, buy side's taken first and sell side. This is a very shallow run, and also it seems like they were also consolidating this pair a little bit. Just because if you would have entered short here, these retracements probably would have took you out if you were placing your stops at break even. If you weren't patient enough to actually see price break below this low, then holding a break even stop loss here would have probably stopped you out. But it's nice to see, I'm observing the movements of today, and then I want to just point out maybe a 12 a.m. over here. Let's see if there's a 12 a.m. around here. Maybe that's what today reached for over here. We have 12 a.m. over here. Let's see. Doesn't seem like they reached into that today, which is fine. I'm not saying that it always works, but these are just little things that I'm noticing, little nuances and things like that. But it didn't work, I guess. 12 a.m. Oh, we have a 12 a.m. here though. Opening price, and boom. As you guys can see, that 12 a.m. opening price also is an order block, of course, coincidence. So I'm not really going to count it as anything special, but the 12 a.m. opening price here was hit at 230. Boom, and then it snaps right back up, and then we go below, then we come above. So something I'm starting to notice. I want to see how 10 a.m. as well reacted here. So where's our 10 a.m.? 10 a.m. opening price is right here. As you guys can see how they keep coming into it, leaving it, into it, leaving it, into it, leaving it. So these are kind of universal concepts that work on all of these pairs. But guys, I don't want to hold you guys too much over here, and I don't want to bombard you with things that I'm looking at and stuff like that. So God bless you guys all. Have a phenomenal day. Have a blessed week, and I hope that tomorrow is a better day. We've seen better days ahead, especially for NASDAQ. We should see ourselves trying to participate tomorrow a little bit. Tuesdays as of late have been great, and so we're kind of going based off of that. I also like these lows here. This is sell side liquidity here, so if I can just take out all of these drawings and just focus on the sell side liquidity that's here, as you guys can see, it looks like, let me go on the daily, it looks like we've rejected away from this level here, which is the new daily opening gap, and then here, so let me do something real quick here. We've broken away from this, and this was during Asia on Sunday, then we left, and now we're looking towards the sell side liquidity here. That's like the major sell side liquidity that I'm looking at right now, and today's price action kind of shows the rollover that is existing in price, and it's not, I wouldn't be surprised if we come here screaming and things like that. So we're hoping for that for this week, this level here, the sell side liquidity. And then I also want to just look at, before I leave, I also want to look at, well, let me see if do we have, oh, I also want to look at the Forex Factory, just so we can have a glimpse. I said a glimpse, lol. Let's look at Forex Factory, smart money. Awesome. Today we have no news. Tomorrow, Tuesday, we also have no news, but Tuesday offers a little bit of high probability sometimes here and there, and I like how Tuesday has no manipulation for it, so I'm all for that. The one thing I will say is, though, that the market is definitely waiting for PPI, core PPI or core CPI to move. So don't be so quick to want to participate early on in the week. But just keep in mind that we are in close proximity to that sell side liquidity. So it is possible that we could see either Thursday, Friday, even tomorrow. Who knows? I'm just going to be realistic, though. Here we are. From where current price is at, we're just 125, 28, 130 points away. So even if they take this during Asia, I wouldn't be surprised. We're not that far away from it. So I think even London can go down into here and kind of do its thing. Or just one of these days that has a high probability news to just come in one swipe. But honestly, I think it's going to happen earlier in the week, and then the rest of the week is going to be madness. So we'll see. I prefer for it to happen Tuesday, or Tuesday New York session, London session, or this Asia that we're currently about to get into. But there you go, guys. This was the review for Monday. Nothing crazy, nothing special. I hope you guys have a phenomenal day. God bless you guys all. Good, better, best. Never let it rest. Your good is better, and your better is best. See you.